Hi guys, hope you guys are good and welcome back to today's video where we'll be doing a weekly outlook, right? So we'll be starting on the DXY with an in-depth analysis and then we'll move on to GBPUSD, all right? So I would like to just cut the introduction short today and just get into the market because we'll be explaining a lot of things, right? And there's a lot of price action to go through. Well, with that being said, let's get into it, right? So to give you guys bit of context, we understand that that is our long-term high, our monthly high over there, and this has now been established as a long-term low. So we don't want to see the market pushing all the way down here, but in fact, we'd like to see the market continue bullish towards the upside. So from that monthly high, we saw a retracement into a weekly fair value gap. And then another thing that occurred is we took these sell stops over here, in which we understand that smart money basically bought against these sell stops, right? So one thing that I want to be talking about today, because I will be making reference to it a lot in today's video, is this idea of engineering liquidity, right? We need to understand, and I always mention this all the time in the videos, that we need to understand that when smart money enters the market, they can only enter against liquidity, right? They need to enter against liquidity. Now, at times, it will happen that smart money will engineer liquidity in order to enter against, right? And this right here happened to be one of those instances. So, how do they engineer liquidity? The way they engineer liquidity is by using retail patterns, right? That everyone knows, that everyone follows. In fact, that a majority of traders follow, right? Retail patterns such as what? Trend lines, um, pennant patterns, support and resistance, all of those sorts of things. Those things that you'll find in a, you know, trading Bible, whatever, basics to trading. The first thing you learn, they use those patterns, right? So in this instance, they used a support pattern, right? Now look, they established the support zone, multiple touches. So automatically, if you're a support and resistance trader, you see this as a strong support because of the multiple touches and how price is just rejecting this point. And eventually you start to establish or accumulate long orders, right? And it's not just retail traders. There's also hedge funds that are trading support and resistance, trend lines, all of those sorts of things. So their liquidity as well, when they enter the market, their stop losses are where? At these lows or right below the support zone. And then eventually, what smart money will do, and understand this, they have the liquidity to do so. They have the liquidity to hedge the market, however they want. And their interest is engineering liquidity to buy against or sell against that liquidity. So at this point, they entered a massive sell, right? Distributed shorts to manipulate the price as to absorb all of these sell orders, these sell stops, right? So the stop losses, like I mentioned, they are basically sell stops, which smart money will buy against. So essentially, they're engineering liquidity such that they have sellers to buy against. So those sell stops will you know, basically be sell orders that they'll be buying against. I know I said the same thing twice. My bad. Right. So that's what engineering liquidity is, right? So I'd just like you guys to get an understanding of what that is because I'll be making reference to it a lot in this video. So they auto pay against these sell stops. To auto pay is to basically buy against these sell stops. We see a heavy accumulation of price towards the upside. Eventually, price reaches these buy stops over here, which is regarded as well as external range liquidity. So we understand the way the market moves is after the market has reached a point of external liquidity, we'd like to then see it draw towards internal range liquidity, right? So in this instance, again, the moment price broke above this point, that's when the daily time frame, just based on structure, that's when the daily time frame was now, seen to be bullish, right? So this whole move over here was just a draw towards the internal range liquidity or a retracement into the weekly fair value gap, right? And areas such as the monthly rejection block, which is at a discount price. So from the discount price, logic tells you you want to be buying in discount and taking profits at points of premium prices or extreme premium prices, such as external range liquidity, right? So at a discount, deep discount, smart money basically accumulated long orders. We start to see that at that point, we got a market structure shift towards the upside, indicating that the institutional bullish order flow has now been confirmed, right? That we are now continuing towards the upside, and that is our long term objective over there, right? So we start to see institutional bullish order flow start to take control. We'll reach these buy stops over here, which would be regarded as external range liquidity. What we then see is smart money distribute against these buy stops as to reach into discount prices, right? And we see how price pushed into discount prices of this big leg over here and discount prices of this leg over here as well. So they distributed or sold at a deep premium. It only makes sense for them to be taking profits in a deep discount price, right? So they reach discount PDRAs such as the bullish order block over here, where they then looked to take their profits, but most importantly, they then bought against these sell stops over here, right? Of these nice relatively equal lows, we understand that there's a strong or large amount of sell stops or liquidity at that point. So they order paid against these sell stops at a discount price, right? Such as to reach a deep premium price. So from a discount price, it only makes sense for you to be taking profits in a premium price or an extreme premium price, being the external range liquidity over there, right? Cool. So they reach the external range liquidity, the buy stops. They sell against these buy stops, right? They sell against those buy stops such as to reach into this daily breakup. So now in all of the videos that I've done over the past few weeks, I've been explaining what a breaker is. I'm just going to briefly do so just to give you guys an understanding. When price was here, right, this bullish candle over here, they basically sold this candle, which resulted in this heavy distribution towards the downside, right, such as to reach this discount price, right, or these sell stops as well. And then the moment they start the trading price movement, the movement price of price resulted in this move higher, right? I don't know if that makes sense, but we got this movement higher, right? And these sell orders now are now in loss, right? So what they'll do is they'll bring the market lower into the breaker as to mitigate those sell orders and initiate new buying orders, right? So that resulted in the move higher that pushed towards these buy stops, where then we saw selling orders, which pulled back into the breaker, but most importantly, into this internal range liquidity being the fair value gap. That resulted in a heavy accumulation of price towards the upside as to reach premium points of liquidity, such as these buy stops, and another, premium PDRA being that daily bearish order block, right? So now this is where we currently are in price action, and for the past 3 weeks, we've just been talking through all of this. And one of the things that I had mentioned that was that we want to then see the price push or pull back into this mitigation block due to the fact that we understand that there are selling orders that they initiated against those buy stops that they initiated over here, which resulted in this push into the breaker and that weekly fair value gap. So the moment we started to see price trade above that point, we automatically started to understand that the selling orders or those sell orders are in loss, and eventually we'd like to see them bring the market back as to mitigate those sell orders and to initiate new buying orders. Another thing we understand is this mitigation block is at a discount price, right? Which is a good point for you to initiate new buying orders as to reach the relatively equal highs and then eventually our long-term draw and liquidity over there. So on the daily time frame, what I'm seeing on the DXY is buy side delivery now, where we can see buy side objectives that we then want to see the market reach into, right? But with that being said, let's go on to our H4 time frame. Okay, cool. So we are on our H4 time frame, and for the past few weeks, especially I think last week, Monday, right? Price was still trading. And here, I made reference to this idea of how we should note how crazy it is that, smart money is keeping this price action at a premium. It's basically keeping the market at a premium price for, I think close to 2 weeks now, right? And then eventually last week we broke out of it. And I think in Monday's video, it was Monday's video, right? I spoke through this idea of how, firstly, them having to keep it at a premium price is basically manipulation on its own because they're forcing us to buy it at a premium. And as we buy it at a premium, where would our stop losses be? At these lows, right? And essentially, what they'll do is they'll push the market back lower, right, as to reach into these sell stops so that they can scale in their position, their buy position. We understand that the long term draw is that point over there, right? But now, what's very important to understand about smart money is that they have a very large, amounts of liquidity. And when they enter the market, they can't just enter, you know, one position of that, large. What I'm trying to say is they can't just enter, one large position. They have to scale in their positions because they need liquidity to do so, right? So they scale in their positions, right? And if they never scaled in their positions and they disregarded that, what they'd experience is slippage, right? Which is a bad thing because automatically they'd be in loss because the market would just spring up, try and find that liquidity that they're trying to bring into the market, and then that's where their order will be filled. And the difference between where the order is filled and where the market is trading would be slippage. So automatically they'd be in loss. So they need to scale in their positions. They need to manipulate us, retail traders, and hedge funds, all of those sorts of things, into scaling their positions, right? So they're keeping it a deep premium. They're constantly taking sell stops, such as to scale in their positions. What are they doing? They're pushing it into a premium, selling against these buy stops, right? The whole time they do that. And that's the first form of manipulation they've been doing. The second form of manipulation, and by the way, these buy orders that they had scaled in, they're now in loss. And eventually you're going to see the market trade back up there. And they'll use this points where they entered these orders as reclaim order blocks. And those points are very strong support zones, right? Of course, as the market plays on and we get to those points, I'll show you that what reclaim order blocks are. And those are strong support zones which we want to buy because they're going to reclaim those points and enter new orders, right? The second thing they were doing is they were engineering liquidity. And I spoke through this on Monday, right? When price was somewhere over here, that on the buy side end of things, they're engineering liquidity by using a trend line because trend line traders are constantly selling this. Where are their stop losses? At the highs. Those stop losses will be regarded as buy stops. So eventually you'll see smart money push the market up there, absorb these buy stops to do what? To enter their sell order, their heavy sell order. So they push it into a heavier premium price over there and distributed against that, such as to reach what? A discount price. And I'd been speaking through the idea of why we'd be coming down here. Three things. Firstly, you're bringing price down here because you sold at a deep premium, such so that you can take your profits, right? In a deep discount price. Secondly, you want to mitigate the sell orders that you initiated over there, right? Mitigate those sell orders and initiate new buying orders, right? Thirdly, in fact, you want to buy. That's the third thing. So you have liquidity over here, being these sell stops, which you're going to buy against, all right? So that's the thing that smart money is always trying to do. And in fact, that's what happened in this price action. And the reason why I'm not necessarily a fundamentals guy and I don't wait for news to give me a direction is because look at Friday's candle. This is Friday's price action over here. NFP was by far all of the news, high impact news was extremely bad for the dollar, right? And we saw that resulted in a heavy move to the downside. Now, the first question you have to ask yourself is why didn't we see the dollar continue towards the downside? Because the news was extremely bad. I, what tended to happen was, and I was watching all of this, NFP dropped, and I think about 30 minutes later, you just saw a heavy rejection of price towards the upside. So that already gives you an idea that they've accumulated their long orders against all of that. And already that should give you an understanding that the market is constantly being manipulated. All right. But with that being said, let's go on to GBPUSD. So on GU, I've been talking through this idea of how eventually we would like to see the market pull back into that bearish order block over there on the weekly time frame, of course. And that for the past 2 weeks, it was just a momentarily move as to reach there, and then we see a continuation of price towards the downside. And of course, those are my long-term lows or draws on liquidity over there. A point of reference that I want you guys to pay close attention to is this point over here, which is our breaker. We understand at some point, smart money bought at this point. You'll see again, there's another area of engineering liquidity over here when we go into our daily time frame. Bought this candle such as to absorb all of that liquidity to then sell against, right? And that's how we eventually started to respect premium PDRAs. And essentially what this area is very important because it's aligned with that break over there and the order block. So we saw price just hit that, and then we saw heavy distribution towards the downside. But let's go on to our daily time frame. Okay, cool. So on our daily time frame, that area over there you could use as well is this area over here. That's the breaker as well. But the weekly is very specific, and it's also aligned with that weekly bearish order block over there. That's why I used that. So I want you guys to pay close attention to something, right? I just want to be marking that point over there to that point over there. So these are my lows, and that's my on my daily time frame. And this was just a pullback into premium prices, right? So the reason why this is a breaker and it's a strong area is because we understand at some point smart money was engineering liquidity towards the buy side, right? We can see there's also a nice resistance zone over here. So they bought this candle and eventually saw a heavy accumulation of price to the upside, absorb all of the liquidity residing over here, and entered a sell order. They distributed against that in a deep premium. And mind you, they did all of this engineering of liquidity at a deep premium price as well. So they sell against that, and we see the market constantly pull back into premium PDRAs, right? Let's just do this so that can understand what is premium and what isn't, right? And we see every distribution in a premium price. Market continues lower, reaches a discount price where we fill this monthly fair value gap as well as that weekly. Uh, we took these weekly sell stops from. So from external range liquidity, we'd like to see the market draw towards internal range liquidity, being the weekly order block over there. And most importantly, the reason why that point is very strong is because it's in a premium point, premium PDRA, right? Which we then like to see the market sell against, right? Or smart money sell against. Another thing we can note as well is that if we're going to be marking all of that out, we understand that price basically pulled back into a premium PDRA, being that fair value gap over there. So another point of reference that we'd like to then see the market sell against as to reach discount prices. So automatically, if I'm going to be looking for selling orders, I'd like to first see the market draw into discount prices or discount PDRAs. So automatically, I'd like to see from that point the market draw into this weekly, not the weekly, but the daily fair value gap over there. But let's see the H4. So on the H4, we've come to understand that price is in a deep premium point over here. And like I mentioned in Friday's video before NFP, that another thing they were doing is essentially establishing a support zone, right? They established not a support but a resistance zone over here. They established this resistance zone in a premium price. Automatically, when you see this, understand that they are engineering liquidity. What they were doing was basically establishing that point over there, but bringing the market back into discount prices and accumulating long orders at these points, such as to reach these deep premium prices, right? After they reach the deep premium prices, after they had mitigated the selling orders off of that break over there, that's when they now start to initiate selling orders into the market, which would then look to reach into discount prices, right? These lows over here would be regarded as engineered liquidity as well that we'd like to be targeting. With that being said, best regards